Last year, the US stock market delivered returns that many investors could only dream about. Yet millions of Muslims stayed on the sidelines, not because they lacked money, not because they lacked opportunity, but because they were never shown a clear path between investing and faith. And that creates a serious problem, because every year you delay investing, inflation quietly reduces your purchasing power. The question is no longer whether investing matters. The question is whether you can invest without compromising your principles. Quick note: we are not financial advisors or scholars. This video is for educational purposes only. Always do your own research and consult qualified professionals before making any decisions. In the next few minutes, you'll learn a simple 5-step framework for halal investing. You'll learn how to identify compliant investments, avoid common mistakes, choose the right tools, and make your first investment with confidence. Most importantly, you'll understand how to grow wealth without crossing the boundaries set by Sharia. Let's begin with the foundation that every Muslim investor must understand. Before you buy a single stock, open a brokerage account, or download an investing app, you need to understand one rule. Not every profitable investment is a permissible investment. In Islamic finance, every stock must pass 2 filters. The first filter is the business itself. How does the company make money? If its core revenue comes from alcohol, gambling, conventional banking, adult entertainment, pork products, or other prohibited activities, the stock is not permissible. The second filter is financial health. Even if the company's business is permissible, excessive debt can create a problem. Many scholars use financial screening standards that examine debt levels and interest-based income. Why? Because earning from interest, known as riba, is prohibited in Islam. Think about it this way. When purchasing halal food, the source matters and the process matters. The same principle applies to investing. The company and its finances must both be acceptable. Let's look at a real example. A company like Apple sells products and services that are generally considered permissible. Meanwhile, a conventional bank may generate most of its revenue from lending money at interest. One passes the business test, the other fails immediately. Today, tools can screen these criteria in seconds. But many investors skip this step entirely, and that leads to a mistake that quietly destroys both financial and spiritual confidence. Because knowing what's halal is only half the equation. The next challenge is choosing the right path, and most beginners choose the wrong one. Once you understand screening, the next decision is how you actually want to invest. For most beginners, there are 3 options. The first is halal ETFs. An ETF is a fund that holds many companies inside one investment. Instead of buying one stock, you buy a basket of stocks. Funds such as SPUS and similar Sharia-compliant ETFs provide exposure to hundreds of screened companies through a single purchase. This approach requires very little effort. The second option is individual stocks. This means selecting companies one by one. You might research businesses like Microsoft, Adobe, or other screened companies and build your own portfolio. This offers greater control, but it also requires more research and discipline. The third option is a halal robo-advisor. A robo-advisor automatically manages investments according to a chosen strategy. Platforms such as Wahed have made this process accessible for Muslims who prefer a hands-off approach. Each option has strengths, but beginners often make one costly mistake. They assume complexity produces better results. In reality, many successful investors built wealth through simple, diversified investing. Not complicated strategies, not constant trading, not chasing trends. For most beginners, a diversified halal ETF is often the easiest starting point. But even after choosing the right investment vehicle, another problem appears. Because a surprising number of Muslims never actually invest. Not because they're afraid, because they don't know which tools to use. This is where the process becomes practical. You need 2 things: a brokerage account and a screening tool. A brokerage account allows you to buy investments. Think of it as the marketplace where transactions happen. Many major brokerages offer commission-free investing and fractional shares. Fractional shares allow you to buy part of a stock instead of an entire share. That means you can start with relatively small amounts of money. The second tool is a halal screener. Applications such as Zoya, Musaffa, and Islamically analyze companies against Islamic screening standards. Imagine you're interested in a company. Instead of spending hours reviewing financial statements, you enter the ticker symbol. Within seconds, the platform provides a compliance assessment. This removes uncertainty, and uncertainty often prevents action. Once your account is open and your screening process is established, you're ready for the most important step, actually becoming an investor. Because knowledge alone does not build wealth, action does. Let's imagine you're investing for the first time. You decide to purchase a halal ETF, such as SPUS. First, you fund your brokerage account. Next, you search for the ETF. Then you choose the amount you want to invest. Many brokerages support fractional investing, allowing you to start with modest amounts. Finally, you review the order and complete the purchase. That's it. You now own a small piece of hundreds of screened businesses. But here's something many new investors never learn. Buying the investment is not the finish line, it's the beginning. The real advantage comes from consistency. Let's look at a simple example. A person investing $100 every month for 20 years at an average annual return of 8% could accumulate tens of thousands of dollars. Not because they found a secret strategy, because they remained consistent. And that principle should sound familiar. The Prophet, peace be upon him, taught that the most beloved deeds are those performed consistently, even if they are small. The same principle applies to long-term investing. There is one final piece many investors overlook, and ignoring it can turn a good investment process into an incomplete one. Even screened investments may contain a small amount of impure income. This can occur through activities that are incidental to the business. That is why purification exists. Purification means donating the portion of earnings that came from non-compliant sources. Many modern Islamic finance tools help estimate these amounts. The process is usually small, but it reflects an important principle. Financial growth should not come at the expense of spiritual accountability. So let's bring everything together. First, understand what makes an investment halal. Second, choose a path that matches your experience and goals. Third, use a brokerage account and screening tool to simplify the process. Fourth, make your first investment instead of waiting for perfect conditions. Fifth, stay consistent and purify earnings when necessary. That's the framework. Nothing complicated, nothing hidden, just a practical roadmap for building wealth responsibly. Remember this, you do not need to become a financial expert this week. You do not need thousands of dollars to begin. And you do not need to sacrifice your values to participate in the market. What matters is starting with knowledge, acting with discipline, and staying within the boundaries of your faith. Because halal investing is not about getting rich quickly. It's about building a future that benefits both your wealth and your akhirah. If this helped, follow for weekly halal breakdowns. And remember, the best time to learn was years ago. The second best time is today. See you in the next video, where we continue building wealth with barakah, step by step, without riba and without scams.